Henrik Tjärnström, CEO, and Patrick Kortman, Director, Corporate Development and Investor Relations. Short-term revenue pressure is impacting profitability at the moment, but Kindred's long-term strategic direction remains well on track, and the transition towards locally regulated markets continues. Henrik, can you elaborate a bit on the Q1 performance and the drivers behind?
Yes, the first quarter came in broadly in line with the fourth quarter. We had 247 million of revenues, which is in line with what we had for the fourth quarter. And it's kind of logical as well as the market mix is similar in the first as it was in the fourth quarter. Of course, we're still experiencing some temporary headwinds from the COVID normalization. Also that we had the sporting schedule of last year was different this year. And we also had the tough comparatives that we had from last year. Also the cessation of services to Dutch residents had an impact as well, of course. And then we also took some further affordability measures in the UK, which impacted also the business. But as I say, those we deem as more of a temporary character, and we're still very firm on the long-term opportunity for the group.
Mm. And if we talk about the sports side and the sports betting margin, it tends to vary quite significantly from quarter to quarter. Patrick, can you comment on the sports betting margin during the quarter and what affected?
Yes, certainly. So we ended up at 10.2% after free bets during the quarter, and that's slightly above the long-term average. But it's also worth highlighting that the sportsbook margin has increased gradually over time, and there are several reasons for that. I think one is market mix, where we, for instance, France, which has capped payback to the customers of 85%. So when the French share of total turnover increases for the group, that will have an uplift on the margin. And as Henrik also discussed during the presentation today, we see an increase in pre-game betting and racing, which have higher margins than live betting. So there are several factors playing into the increase in the sportsbook margin that we currently experience.
Mm. And let's continue with the performance across Kindred's core markets. It's been fairly mixed in the quarter, with the mature Nordic markets reporting a gross revenue growth year on year, while UK and France are showing a more subdued performance compared to Q1 last year. Mm. If we start by looking at the Nordic region, Patrick, what can you say about what's driving the strong development there?
Yeah, we're obviously very, very pleased with the performance in the Nordics, up 9% in reported currency against last year. And especially happy about the fact that all our markets in the Nordic region recorded a growth year on year. If you take first the product side, we had a strong performance in casino, up 26% against last year in the Nordic region. And then if we pick a few countries, I would like to highlight Sweden, where we're up 23% against last year. It was driven by strong development both in sportsbook as well as in casino. Here, obviously, when you compare year to year, the fact that the temporary COVID restrictions were lifted late last year, it's distorting the year-on-year comparison. I would also like to highlight Denmark, actually, which showed strong activity levels and gross winnings revenue up 12% year-on-year.
Also important to mention that the FX played a part as well. So the 9% is actually 14% in constant currency, which is making it even more satisfying.
Yeah. Very pleasing to see the Nordic region continuing to perform so well. Henrik, can you comment on France and UK?
Yeah, this is a trend that we've seen over the last couple of quarters, and we have gradually increased our affordability measures and initiatives in the UK market, and that have had an impact throughout 2021 and now also into the first quarter. Also in French business, we saw some more temporary headwinds during the second quarter of last year with platform stability issues and other things that impacted the business, especially during the second quarter of last year. And we saw gradual improvement from the third quarter into the fourth quarter, now also into the first quarter of 21. So if you look year on year, both France and UK experienced really tough comparatives with all-time high levels in Q1 last year. And of course, now with the COVID normalization effects and also these affordability measures in the UK, there was a cooling off effect. So the UK market was down 21% year on year. But if you look over a longer period of time towards 2020, it was actually up 68% still on 2020 Q1. So that shows the long-term development, which has been really positive. France, on a similar pattern, was down 15% year on year, but sequentially was up 13% in constant currency, which again highlights the improved momentum that we've seen throughout the back end of last year and into the first quarter. So, of course, headwinds that we've seen and we take them on the chin, but we also normally work to address these kind of things and then we come out stronger over time, and this is what we believe will be the case in the UK and France as well.
Long-term value of the business focus for sure. And Kindred in Q1 saw reduced profitability as a result of lower revenue contribution, while the cost base remained fairly stable. Patrick, can you elaborate on this and share some color on Kindred's current scalability?
Yes, Henrik actually mentioned here earlier, Q1 was not much very different from Q4 in terms of top line, and hence and with the current investments that we are doing and the temporary low revenues, we have a short-term pressure on our margins, and we ended up with only an underlying EBITDA of only 10% during the quarter. I think it's important also to highlight here that we are carrying cost for the Netherlands currently with no revenue contribution, and we are investing in the US with a negative contribution, obviously. So actually, if you exclude the US from the margin, we would have ended up with an underlying EBITDA margin of closer to 15%. But yeah, we are of course not happy with the performance. We are continuing to invest in growth, but at the same time we are taking measures to improve our scalability, and we are doing increased focus on cost optimization. That's across the entire P&L. We are working on improved marketing efficiency, with very high focus on return on investment. And we are optimizing our investments in the US, and we are working very hard to enter the Dutch market. And then lastly, we are investing in future scalability. Relax and the Kindred Sportsbook platform, these are key enablers for future scalability.
And again, just to add to that, exactly as Patrick said, we're not comfortable or happy or satisfied with the 10% EBITDA margin, but I think it's also worth to put in perspective that there's a lot of hard work over the last couple of years to improve profitability from locally regulated markets to actually make this 10% possible at this stage. And that's a solid foundation for us to build from. So once we can get back into the Netherlands and as we see improvements in the US and other markets, we're expecting this long-term EBITDA margin to trend back towards our historical long-term average of over 20%, but it will probably take another 2 to 3 years until we're there. But that's exactly normal in our transformation journey that we've been on. At times of local regulation, we see margin pressure short-term, and then we recover and improve our margin over time. But
thank you, that's very clear. Finally, looking into the rest of 2022, Henrik, can you say a few words about Kindred's trading update to begin with, and then what you expect for the remainder of the year?
Yeah, the trading update was down sequentially, or down year on year, I should say, against very tough comparatives again from the second quarter of 2021. It was Q2 2021 was just under an all-time high that we had in Q4 2020. So again, very, very tough comps, and again we're expecting the current situation to remain during the second quarter with tough comps, and also the Netherlands situation is also remaining at least until we can come back into the market, but realistically for the full quarter will have a sort of a small impact on the overall numbers as such. We also saw a slightly weaker sportsbook margin at the start of the quarter now in the trading update period, with 7.8% for the trading update period in sports. But casino remained very stable, similar to Q4 and Q1. which is very encouraging. And sport, we've seen before that statistically they would normalize over time, and that should bode well for the full quarter, but of course that's not a given. But at the same time, this year was always expected to be tough in the first half year with tough comps, and then gradually easing throughout the year. And then also with the World Cup coming now in Q4, we expect to be a big event, especially from a customer acquisition and reactivation point of view, which will build our business, especially for next year. So again, with the US, we worked very hard during 21 on improving our underlying fundamentals, our new creative concepts, and we just launched in Ontario as well on day one of the opening there on the 4th of April. And we're really encouraged by some of the signs that we're seeing from the initiatives we're putting in the US, but of course we want numbers to pick up on the back of that as well.
A lot going on, and as always, exciting times ahead for Kindred. Thank you both very much for your time.
Thank you.
Thank you.